Doing the intro today or me?
You can do the intro.
Okay. Hello, Benzinga Nation. Welcome back to another episode of Benzinga Live. It's Monday. You know what that means. The stock market is back open. So without further ado, let's kick off the show.
Let's get ready to rumble!
Benzinga Nation, jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna. The best trade idea resource out there.
Oh, look, we're up there now. What's up, guys? How we doing? Spencer, AB, how was your weekend?
It was good, man. I was actually down in Chicago. Took the train there, took the train back. Great experience, really.
All right, cool. I was down in New Jersey, took the plane there and the plane back, and it was an okay experience.
How was the airport condition?
Oh my gosh, I'm so glad you asked. We got a lot to get to, but first let's take a minute and talk about air travel. It was insane. I had a 6 a.m. flight on Saturday morning, and I almost missed it because of how busy the airport was. I thought, how busy could it be at 6 in the morning on a Saturday? Busy, it turns out. So that was crazy. Almost missed it. We were literally running through the airport to catch our flight. Never done that before in my life. And then the way back yesterday, we're at Newark, New Jersey, flying out there, and we're at the United Terminal, and the line for security went through the entire length of the terminal. I've never seen that before. And I've flown on Thanksgiving, I've flown on Christmas, on New Year's, and I've never seen the line go the length. It went downstairs through the entire length of the building. It was insane. It was like an hour line for security, and the line was moving. It was still an hour.
I've seen some reporters and stuff that cover airline and travel in general, basically saying, look, if you're preparing to fly for Thanksgiving or the holiday season this year, give yourself extra time. The airports will be crazy. Some of these airlines might still be a little bit understaffed, so expect bigger wait lines. So I don't know from a stock perspective what that's going to look like for the airlines. All I know is from a travel standpoint. If I'm flying back home to Missouri for Thanksgiving, I'm giving myself some extra time this year.
Yeah, for sure. Tanya Pie's asking if we had a home alone it. Yes, we home aloned it. We were literally sprinting through the airport to catch. We made it by maybe 5 minutes before they shut the gate. It was touch and go there. But anyway, enough about that. Let's first, before we go any further, I should mention that we do have a sponsor on today's show. We are still we're still up to that level. We've made it, right? We've achieved a sponsor. And just like last week, the sponsor for today's show is the IG Forex Trading Summit. You can join them on November 9th. It is an interactive virtual trading summit featuring industry experts teaching you all things Forex. You can learn the basics, how to use Forex, how to diversify your portfolio, how to you take a contrarian approach to Forex, and how IG's experts make their own trades using the platform. Special guests include the VP of No Nonsense Forex, Brian Brian Caprice. Register today for your free virtual event bag filled with courses, exclusive content, and more. Again, November 9th, 11 to 3 p.m. Eastern Time. The link should be there in the chat, and it should also be on the screen. Well, there it is now on the screen. IG.com/US/trading summit. Again, that's tomorrow, isn't it? Yes, it is. November 9th. Yes, today's the 8th. All right. Tomorrow, 11 to 3 p.m. Eastern Time, IG Forex Trading Summit. Check it out. Also, that is not the only event tomorrow. I'd be remiss to ignore. Did I use that right? I'd be remiss to mention. How do I use that? I'm not quite sure.
You would be remiss to ignore. Yep.
I'd be remiss to not mention the Benzinga FinTech Awards all-day event tomorrow. If you are in New York, come to the after party. Just go to benzingafintech.awards.com to learn more how to do that. It is a day for us to celebrate all the innovations in fintech this year. We're giving away awards. We're having some panels, doing some cool stuff. If you're like us and like you're into the markets, but you're also into like the companies and the people that are like bringing us forward, and not just in terms of like stocks, but in terms of like technology and bringing access to people for different things. And this is the day for you. We have a whole day to just celebrate innovation in the capital market space. So that'll be tomorrow. FinTech Awards here on this channel. As far as guests for today, we do have a lot, as usual. This is what we do here on the show. Our first guest, we're going to bring him on in just a second here. Matt Hammond from IPO Warriors. We have a big week in IPO land. I have a couple questions for Matt. After Matt, we've got a new guest, Tooey Courtemanche. She's the CEO of Procore, ticker PCOR. We're going to talk all about the happenings basically in the construction business right now, because his company is basically a technology platform for construction companies. So we'll talk to Tooey all about that at 12. It'll be at 12:45. We'll have Jake Wujastyk from TrendSpider on the show at 1, and we'll have Chris Capre from Second Skies Trading on at 1:30. Sound good, AB?
Sounds perfect. Yeah.
All right.
Spencer, let's talk about some big news that came out over the weekend.
Real fast, and then we'll get to Matt.
Yeah, real fast.
Cool.
Elon Musk.
Oh gosh, yes.
So Elon Musk, I'm sure most people watching are aware, threw out a tweet essentially with a poll saying, should I sell, what was it, 10% of his Tesla stock?
Yes.
And I have some thoughts on it.
You have thoughts?
Yeah, I mean, this is all opinion based, no I guess facts or data to back this up. But essentially, Elon Musk, he's a genius. He made it sound like his reason for selling 10% of his stock would be so that he can pay taxes. He doesn't want to be tagged as someone who's avoiding paying taxes. And since he has no income, really the only way for him to pay taxes is to realize some of his capital gains and pay taxes on that. So if Elon Musk just goes out and sells 10% of his Tesla stock on his own, no explanation, people would be asking questions, and it would raise some, criticism. I think the stock price would drop. But this way, he can make it sound like he's doing it for a very good reason to pay to, whatever it is.
Out of the goodness of his heart.
Exactly. Like, he's such a good guy. He's willing to pay. But and here's what I'm saying, just my opinion. Just my opinion, doesn't mean anything. I think he wants to sell, and he's doing this in a not sell his Tesla position, but he wants to sell a little of it with the stock price so high.
I think he's already sold.
You think he already has, and now he knows it's going to come out in the next filing, so he's getting out in front of it this way.
Yep.
But the question is, how did he know then that yes would be the one picked in this Twitter poll?
Well, he didn't. Is the answer. But
if he already sold and then no was selected, then he'd be in kind of a tough position,
Then he could just say, thanks you for your opinion, but I'm doing what I want. It's my money, No, I suspect he already sold. Put a 1 in the chat if you suspect Elon Musk already sold some Tesla. Put a 2 if you think that he has not sold anything yet and will. And Solar Up, he said he does not. Well, actually, no, this is an interesting point from Solar Up. Elon wasn't specific about all his companies. He said he takes no income as CEO. Well, he's not CEO anymore, right? He takes no income from Tesla. I don't think he wasn't clear about SpaceX or the Boring Company. Interesting observation, Solar Up. Good point. Okay.
Yeah, and one of the reasons that I think Musk may have been like already so last week, Musk's brother Kimball Musk sold a bunch of Tesla shares, and I imagine they talk about this stuff. They're brothers after all, and among business part, everything. So if Kimball has a reason to sell, why would Musk not also have that same reason? I don't know.
They have options that are going to expire in the next 10 months. They're just trying to get out ahead of that. Like a lot of options that they've had for like a decade.
We'll see in due time. Again, that's just my thesis is Musk in his sly genius way is marketing it essentially as a positive reason to sell 10%.
Okay, so he's out there playing chess. We're over here playing tic-tac-toe.
Exactly.
All right, that's fair enough. Hey, let's bring on our first guest today. We got a big week in IPO land, a couple of big ones. The biggest one probably Rivian. Let's get to that with our guest, Matt Hammond from IPO Warriors, joins us every Monday to talk about what is to come in IPOs this week. Matt, good afternoon. How are we doing today?
Yeah, good evening. Actually, it's 7 p.m. out here.
Good evening for you.
But
good
hey
evening.
guys, how you doing? Yep.
We got a lot to get to. So let's jump right in. And I frankly, I just want to know about this week. I don't even know. Unless you had anything crazy happening last week, let's just go right into it.
We do have some crazy things, but first I wanted to get started. You guys can see my camera lighting and my, I'd like to be a little bit further back. I want to do some also live streaming of IPOs. So I'm kind of reaching out to the community and asking for some support here to buy some better streaming gear. I'm only asking for about $2,000. We're already $1,500 into it. Just need to get a better lens. I need to get a continuous power supply. We might even lose the video feed here partway through this one. And then if I have anything extra, some lighting and a monitor, there's the link there, Fundly/IPO Warriors streaming.
Let's get Matt some better streaming equipment. Let's go.
I want to look better. I want to be a little brighter, and I want to do some live streaming. I think it's a lot of fun. I think it's something you guys could tap into on big IPO days. So help me move in that direction, guys. Thanks. Okay. Looking back, we'll go back. Last week had some really good ones. I missed the print here on Nerds was like 50% also. So if you remember about a month ago, I called out pets, and it was that day we were having all these technical difficulties, and we did the whole show. And at the end I said, hey, here's a recent IPO. They just did a follow-up offering, and it was Bosted Securities. Pets was at $1.40 right then. I said, I don't know when, but this looks like one of those like new move Chinese stealth IPOs. They've run out of, they can't do Chinese IPOs. So, they're looking for other ways to move money out of China. And they just did this really weird looking direct offering on Pets. Well, just last week, Pets did another follow-up offering, and it dropped from from $2.25 down to $1 in like 1 second at the close of the bell. And then it shot up in after hours to a high of $8. So if you bought in when I first alerted it, you got in at $1.40. Right now it's at about $3.80. And it's been very volatile. I still don't think they've done the big pump yet. This is not financial advice, and this is it's kind of running actually as we speak right now. But it's an interesting play, and it was kind of one of the original stealth IPOs. So that was like a big up. And then I did pretty well on NerdWallet. I didn't play Allbirds because my friend's the CEO, and I thought my mentality would be clouded by that. And then I totally broke all my rules and lost a lot of money on mains. So the reason I like to look back at even the ones where I lose money is those are where you learn the lessons that you bring forward. Anyway, Allbirds was super easy. If you like this one and you saw that, hey, I think the math to do here was tech, I guess tech elite really love this brand of shoes. They all wear it as kind of like the cool thing to wear. Debuted at 21 and just shot straight up. I mean, it was just an uphill ride. This was exactly the kind of play that I love to be in, and I can only say, well, I sort of made the moral decision not to play it. Not moral so much as just mental. I know a few CEOs of companies. I sat out of Compass because the CEO is a friend of mine. I sat out of this one. I just feel like I want them to do well, so I'm like applying this confirmation bias, and when I'm aware of that, I just say, hey, better to leave it alone. And in this case, I was wrong. It didn't work to my advantage. But this kind of play, you just let it go up and then set your stop loss, rate. Once it clears, say 22, 23, set your stop loss, and you had all day to ride this out. I think if you trail that stop loss here, maybe you get out at 25 or 26. If you really love this and you let it run to 30, great. You do want to sell these kind of popular names. I think it's down back to 24 today. But, this was a great IPO opportunity and a perfect example of how brand name recognition can drive the stock up off the debut. Now, I used what I saw on day with Allbirds to play NerdWallet, which I originally said that I didn't really love it, but when you go on social media and people are posting, nerds memes in relation to this IPO, and the float was 7 million shares, so it really didn't take a whole lot. It was kind of had a brief moment of memedom, and it debuted. And watching the indication price, it started out kind of at 21, and they sold that easily, so they moved it up to 22, and then towards 23, and you're like, okay, clearly the demand is showing up for this. And you bought in on the debut. It halted right away. For me, I could see that there was, in the level 2 data, there was still buy orders up to 30 and not a lot of sell orders up until about 30. So I said, you know what, this was an unexpected win. I set a limit order at 29.85, just below that kind of 30 level, and took my profits there. If you held on longer, you got rewarded with another halt around here, and then it spiked up to 34. So if you did hold to that second halt, I would really be advising you to take your total profits off the table at that point. This was a great win, in at 23, out at 30, or out above 30. So we had two kind of really nice winners, going into Friday. And then Mains did exactly what I thought it would do. This was a $5 Bosted special with a 2 million share float. And I just was, I'm dealing with some, not to bring too much personal stuff. My dad's in the hospital. He's been out all week. And it's a pretty bad situation. And I just wasn't in a fully clear frame of mind. And I missed the indication. It went super early, and this had been rescheduled from the day before. The day before, they had said they were going to take it live at around 11:50, which is pretty late. And then Friday was a full slate. So I don't know why in my mind thought, oh, well, they won't do it till 11 or 12, so we have some time. I was kind of getting into my trading day and was just looking at other things, getting out of some other positions. The market was hot, and I missed this entry. And I had planned to go pretty big because it did what I thought it would do. It halted up, opened up above the halt, and that's where I would have exited. That was my play right there. And instead, I said, "Damn, I missed it. Okay, screw it. I'm gonna chase this one. Everyone's been talking about it." I have two rules in trading IPOs. The first one is take profits without regret. The second one is don't chase. And I chased, and there was no way out of it once I chased. And I sold because even though it came up a bit this morning in early pre-market, I wasn't trading this in a Webull account. And really, I'm up so much on the Pets play and the IINN play, and the other IPOs in the last month have done really well. I had to look at what is my position for further risk, because this could go down to 5 or lower. And I just decided, look, you got to eat the bad loss now, because my portfolio is still in a great position to keep trading. And if I take any more loss, I'm going to start getting towards, a handcuff position that I don't want to be in. So anyway, I like to analyze my losses as much as it's not very fun. And I'll, discuss them with other people, and I'll share them because I'm not infallible. This isn't a foolproof strategy. But if I did follow the rules, I wouldn't have gotten hurt. I would have taken a big profit, which just adds more pain to the injury. Pets just ran from 3.6 at the beginning of this show in the last few minutes to breaking $4. This one really could do something crazy. We've seen Bosted, Chinese. It's Chinese dog food. You can't love the company. You just have to understand that, it's a crazy stock. Keep an eye on it. Okay, let's put that aside. This week, we've got a bunch of very interesting ones.
This is the one I want to know about. Hertz. Let's go, Hertz. Round two, baby.
Yeah, and this one hurts me too, because I penny traded, about a year ago right before it delisted, about a couple of weeks before. I got stuck in a tiny upside down position. I held it. It delisted. It, dropped in half. And when it came back up a little bit, I said, screw it. I'm going to get out of this. I might lose everything here. And I can't be too angry, because there were other opportunities after that where I could have bought for even cheaper. I mean, if I really loved this for some reason. But now we know it's coming way back. We had Avis go kind of brief meme short squeeze last week. So Hertz has kind of a good timing here for bringing, bringing itself public, but it's not actually raising money for the company. It's raising money for the investors who bailed it out of bankruptcy.
Great point. Great point.
Move means this isn't an IPO that to me is going to be a bunch of institutions saying, we like this company, we'll take a block of shares. This is very likely that this is a pure liquidity event. So even though so on top of a pretty large float of 30 million shares, you're not talking about half of that or 2/3 of it being held up by institutions likely. I mean, we're talking about an opportunity for people who bailed this company out for pennies on the dollar, getting to cash out at a time when it's not a bad time to take your profits, along with everybody else who has been day trading the OTC ticker. So for me, it's really dangerous to buy this right at the debut. Then again, this could just, how often do you have an IPO that has already been trading with meme strength?
Yeah, you're right. You're right.
I'm not even going to bother to talk about financials here. I'm not going to talk about Tesla. I'm not going to talk about anything other than this is going to be a battle of sellers who are, playing the financial smart card versus meme stock traders who could blow this up into, this could easily drop to $10, and it could, there's no reason why it couldn't run to like $150. So I don't know. This is, you flip a coin, play it with money that you might as well, that you'd be comfortable throwing in the trash. For me, it's kind of like, well, let's just see what it does off the debut, or at least try to gauge something about what's happening in the pre-debut indication. So we can see the number of shares that are being kind of slotted up for the opening trade in the pre-debut indication on the Webull mobile app. So if I'm seeing something absurd like 15 million shares being traded in the opening minute, then that's kind of, if that's pushing the debut price up, then I'm going to say, wow, maybe this really is the meme, the meme strength. If it starts, if it's a sell side imbalance and it's pushing the price down, I'm going to say, well, let's just see how far this falls off the open. And even then, I'm probably more likely to say, let's see which way this starts to move, and anticipate that being a bit of a continuation. So I have no way to predict what's going to happen. I've laid out the factors that I can understand, but we're talking about everybody who owns shares of this is way up, and there are a lot of shares to sell. So
yeah, that's the bottom line. Think about who you're raising money for. It's not the company.
Exactly.
Yeah, that's all I need to know. But to Matt's point, stock can do anything on day one or day two. But think about who's selling to you, right?
Who are you giving your money to?
Yeah, who are you giving your money to?
For them to save, to further save the company. You're kind of like rewarding the people who bought the brand name and are.
I love it.
Sitting on the assets.
I love it. That's key insight. All right, what else? Societypass. I don't know this one.
So this one has some interesting factors to it. It's basically a garbage company, which of course we like. Because the underwriter is one of these underwriters that does sort of shady IPOs. Maxim is the underwriter. They have done a few. They're kind of one of these low float specialists, a bit like Bosted with more mixed results. But Think Equity and Maxim and EF Hutton, these have all kind of gotten hip to the game of these low float, rando companies that both get pumped on social media, but also seem to sometimes just get manipulated from the inside. What's interesting about this one is that the line of work they're in is their e-commerce and lifestyle websites in Southeast Asia. Now, these sites are not profitable. They don't have much revenue. There's nothing mainstream about this at all. But when I see this trend of, and we know what's going on in China, the Chinese government, the PRC is locking down on the wealthy in China, and the wealthy are panicking and they're trying to find ways to move money out of China. And we before kind of came up with this theory that seems to be backed, which is that these random Chinese companies that get pumped, and they just go up and up, and then all of a sudden they get the rug pulled out from them. I mean, you look at CNEY today, which was a Network One Solutions IPO from a few months ago, steadily ran up from the $4 or $5 level up to about $12, and just dropped 55% today on they sold off. TIRX did this about 6 months ago, went up to over $100, fell 90% in one day. So the theory is, and what I see, I mean, we saw that $5 stock JZXN, $5 IPO that debuted trading at $45. I mean, the only explanation I have for that is that somebody wants to overpay to somebody else who is selling, something that nobody else would interfere with. No one else is going to buy JZXN at $45 to $50. The only people doing that are people who are like, look, I'm trying to move my money out of China and into Hong Kong or America, or a bank account that's not controlled by the PRC. And there's a really kind of easy, genius way to do that is to give a bunch of shares to someone I know outside of China and find a way to pair trade those, so that I'm spending all my money from my Chinese account into buying their shares and moving it over there. And that's what I see. The only explanation I have for the pet setup follows that rule. And this one's interesting because the products are in Southeast Asia. So it's feasible that Chinese, investors had an easier time getting their money from China into a Chinese, a Southeast Asian account or company, and they're going to move that. We haven't seen any like truly stealth IPOs recently. And this one kind of looks like it because it's not on a bunch of the other, mainstream calendars. Let me check if they added it to the NASDAQ calendar. Yeah, it's on there now. And the price is $8 to $10, but still, it's a low float stock. It's Maxim. Who knows? Maybe play it. If you do, don't chase and get out after, after the first halt is my advice. Okay, Third Coast Bank shares, TCBX, whatever, commercial banks in Texas, low float, but these pretty much.
Ooh, that's not what we want, man. You know what we want. You know what we want.
We're gonna get to what you want, but first I'm gonna give you the one you should want. This is my kind of pick of the week. That's in terms of I do feel pretty comfortable putting a solid play into this one. This is Expensify, and I think a lot of you are familiar with this or have heard of it. It's basically like travel and expense management software that allows companies and kind of groups of friends to keep track of who spent what and sort out who owes what at the end of a trip. Or companies can kind of give access to funds to their employees to go buy office supplies, or go to a trade show, or go on a sale, that kind of thing. So it's a kind of in the fintech space, and the revenue growth is impressive. Revenue growth is up 60% in the last 6 months. Gross profits up 96%. And yeah, some of that does go, you're comparing against COVID lockdown, but this has positive operating profit, net income, and cash flow. And when we've seen tech, fintech, anything in those veins that have impressive growth numbers and are in the the positive baseline financials, those have been really strong plays. And with a float of just 10 million shares, to me, this is kind of like, okay, I like this. This is the setup I like, and I will be taking a swing on this one. I think it's probably without having to bet on meme strength or something like that. This is the one I like. This is the one you were looking for, right? Because Cint does.
No, that's not the one.
They do a lot of advertising on YouTube, right?
That ain't it. That ain't it.
Okay, this is an institutional play. They do have a lot of ads on YouTube right now. I just noticed them. Consulting and engineering services. It's probably like one of those like smart companies to invest your money for 10 years, but boring to me. I don't think retail has a lot of interest in this kind of play, and just there's other things that are going to drown this out for retail traders. Flex Energy is also not the one you're interested in, but we did reviewed this last week, so I'm just going to skip it.
Yeah,
It's
I
low
remember.
float. It's low float, but it's Roth capital. People don't like that, and the financials are absolutely horrible. So no, thank you. Maybe I'm wrong. Now we get to what we're, the main event.
Yes.
So all eyes, CNBC will be covering this. Everyone is looking for Rivian Automotive. This is this is, other than people are saying, okay, well, there's Tesla, and now there's like Rivian. I know there's a lot of other players, and I know people talk about them, but people have been looking towards Rivian because they have the electric pickup truck, and they have on tap electric vans that are. They already have a non-binding order with Amazon for 100,000 vehicles, plus the exclusive rights to purchase, the vans for 4 year first right of refusal. Their investors include Amazon and Ford, which you might say, oh, that seems sort of like they're competing against each other, right? But shows that people, serious players do believe in them. They have no revenue. That seems to not matter whether they have revenue or profits. I think they've only produced 100 and something vehicles so far off the line, but they are in production. And there will be a second product launch in December, which would be a nice catalyst. But the thing that makes me a little bit wary about playing the IPO on this one is 135 million shares.
Yeah, we know you hate those big floats.
Yeah, I mean, they are not particularly risky. They just don't add up to a big upside. And this could be different because it's EV. It's a super hot EV. Tesla, cooling down a little bit on something totally unrelated. I mean, I don't know what to say about Tesla. There's no.
I don't know either.
It's just so. Did anything that EVs are like patently allowed to be detached from fundamentals, and so you just
that's the rule. That's the rule of the market. Yeah.
They kind of get hot and cold in groups, and fundamentally, I just sort of scratch my head on them. It's like, I don't know. They don't. Automobiles were not profitable for a long time. And now all of a sudden EVs come along and and Tesla's not profitable if you take out the subsidies and credits, and everyone just thinks that they're like with software, the
I think they were profitable for like a quarter or two. If you took away, I think
without the.
Oh no! I don't. Yeah, I think you're right. Never mind.
So the point is that how many of these companies have to, at some point there's going to be, I think, a reckoning where these companies actually start either consolidating or going out of business. You're talking about these companies have all their eggs in a couple baskets, especially these new ones, and we know that vehicles are kind of some people love some models do really well and they're super popular. Other models absolutely get tank. So if a company comes to market with something that for whatever reason people don't like, it's too expensive. I mean, the Rivian vehicles are expensive. They're twice the base price of the R1T is twice the electric F-150. And so you look at these things and you're saying, well, I think the story might carry this up, and it could do really well. But eventually 2, 3, 4 years from now, there's going to be, it would seem that EVs are less of a sexy new kid on the block and more of a
Matt, you're harsh on my vibe, man. You're come on. This is not where I thought this was.
You have to take these, you have to look at for the long-term investment, I don't know. I don't particularly like them. In the near term, I think that this goes up because people want to like it. It has catalysts on the future. So if you want to play this for like a few months and hope that it goes up from where you buy it. But I'm looking at the first 1 to 2 days of trading this, and I see a lot of hype around it. It's going to take all day long for them to pair up all these shares. It's going to go live probably at like after 1 in the afternoon.
That's what I was going to say. Yeah. And as far as the pricing, we don't have a price yet, as I understand it, but I believe the range is like high 50s to low 60s. I think is last that I saw.
Yeah,
Unless you see-
the range
yeah.
is 57 to 62 right now.
Right.
It would not surprise me if they priced above that and debuted at like 80 or 90.
Right. So let's talk through that. So yeah, like we are well within the realm of possibility of an IPO price at 65, 70, and then an IPO open for the rest of us at 80, 85. Right. That's well within the realm of possibility here.
I would say that's pretty realistic. Yeah. And the thing is, if we start getting up towards 100, which is also within the realm of possibility, if this does something like, when something gets this much, the temperature gets this hot on something like this with a high float, I start thinking of things like Snowflake, like Coinbase, where there might be enough momentum to push this up for 10 or 15 minutes, but the downside can come fast, hard, and relentlessly. So it's pretty hard to sit out on this one and not get in on it, but I wouldn't.
Oh, they raised it to 72 to 74. Thank you, guys.
Okay, well, there you go. So that's they're
gonna raise it again. They
are gonna raise it again. So a debut above 100 is not at all without precedent. So yeah. Again, just remember that some of the strongest. I mean, Uber had so much hype around it, but it had a huge float, and it didn't do well on the IPO. It pretty much traded down from 45 to like 40, or from 44 to 45, closed at 43, and sort of slid off from there. And
I don't know if you remember that day, Matt, but that Uber, I think that Uber IPO, it took like almost all day. It took like, I think it opened at like 1:32 o'clock. Like it took a long time to get that one open. And New York Stock Exchange doesn't do many big tech IPOs like that, but they did Uber, and I remember it taking a very long time.
We've seen a lot of IPO. I mean, generally speaking, it seems like they're getting them out the door faster, but the bigger ones are still going to go into the afternoon, and it seems to me that the more demand there is, the more that they try to edge it up, and this will be an all-day event. So,
all right, oh wait, Martin says he saw his first one on the road. That's one more than I've seen, Martin.
I think that Kramer mentioned there's like 150 of them on the road now or something.
Oh, Martin, you've seen one of 150. Excellent.
Yeah. I imagine they're so.
All right. So hands off for me, hands off for you, but I'm here for the fun. And
I don't know if I'll hands off. I will watch the indication price and gauge how enthusiastic, It seems to me
this will be the story of Wednesday. This will be this and CPI will be the story of Wednesday. Let's move on though, because we got some others here to get to.
This will be the play at Wednesday, where I will make.
Okay. All right.
Expensify. Okay. Weave Communications. This is a software as a service communication platforms for small and medium businesses. It's basically like a business management platform, mostly mobile based for kind of local businesses, that people saying gardeners and dentist office, things like that. Revenue is pretty strong, but I don't really know what to make of, again, 6 months ending June 30th compared to the 6 months ending June 2020. You're comparing two very different market environments. So look at negative operating profits, net income, and cash flow, and I just say, and then the float is 5 million shares. You go, well, day traders love the low float IPOs right now. So
yes, they do.
Watch it, see who's talking about it. I had to step off of Capre, which was low float, by the time it reduced its share offering, because nobody was talking about it. If nobody's talking about it, the low float turns into abysmal volume. And even though you might have, you could have taken a small profit on it, it's not what I'm looking to trade. You'd have had to hold for 2 days to get $1 upward movement. So on Weave Communications, which doesn't even seem like a particularly strong company, I've never heard of it, and I don't think a lot of other people have. So if everyone's just excited to play it, then you go, okay, well, why not? If nobody's talking about it, you go, well. And now 5 million isn't even like the low float attractive play anymore. Now the attractive ones are 2 to 3 million. So I don't know. Backblaze, this one on the surface initially sort of seemed interesting to me. It's cloud-based data storage, but digging into it a little bit further, it kind of seems more like a poor man's Dropbox, and it's kind of like for smaller businesses. Been around.
I never even heard of it. I never heard of it. I don't know if anyone in chat has heard of this. I have not.
Yeah, they kind of go after small, medium businesses. They've been around for a while. They do have positive cash flow and reasonably good net retention rate. The float's pretty low, so I don't know if they don't debut with much of a premium. Maybe it better chance that it goes up than down. But my initial excitement over the low float being tech cloud-based data storage, once I dug into it, it just seemed more like this is like a hosting company basically, but cloud-based. Okay. So nothing particularly exciting there. This one at least has a really cool sounding story. Moneric, it's space-based laser communications equipment. I like lasers and space is cool. So right on.
This is it, man.
Yeah. So what they do is they have basically developed technology that governments and both for governments and commercial use that handles a communication from like ground to space into satellites, and then intra-satellite communication for positioning, and then also apparently communication with airplanes. So as humans venture further and further from Earth, we will need to communicate in ways that require stronger and stronger.
This is a literal moonshot is what this is. This is a literal moonshot.
Beyond moonshot. This is for when we're traveling to Mars and beyond. So they have a really
how much money are they raising here? Let's go.
Their raising is I think 25 million, but right. Okay, 17.
Not too.
It seems like it's an uplisting too, because they've already set the price at 17.48 for 4 million shares. So do the math there. You've got what, 60 million. It is interesting that in the S1, the CEO is going to purchase 75,000 shares. I think my camera just died, so we're
that's all right.
We're going on slideshow. No one's here to see what I look like anyway. Nope. The CEO will purchase $75,000 worth of IPO shares. And you almost always just see the boilerplate text of no existing shareholders elected to purchase additional shares in this security. So that kind of stood out to me. He's bullish. They are negative operating income. The baseline financials are negative. Gross profits up 28% in the 6 months ending June 30th. On gross margins is 173%. That number is kind of cool, but and revenue's up 406%. But when you have such a small customer base, you're talking about very lumpy contract revenue, and we don't know. They just didn't sign any contracts for the first 6 months of 2020, and then they signed some contracts in 2021. So, all
right, Matt, we got to wrap it up here. We're up against the clock.
We're done. Yeah.
All right, we got Hertz, we got Rivian, and
we have two more quick ones. Lulu's Fashion Lounge.
Come on, man, you're killing me here.
Blue Water Vaccines. Maxim Group is the underwriter and 2.2 million shares in its vaccines. So, all right, just watch it. Thanks, Spencer.
Matt Hammond from IPO Warriors joins us every Monday. Matt, always a pleasure, man. We'll talk to you again next week. Matt's got great info as always. So that being said, though, let's bring on our next guest here. I see him lurking backstage. Tooey Courtemanche. He's the CEO of Procore. We're talking construction management technology. Y'all know there's some really crazy stuff going on right now in the construction space. We got supply chain chaos, we got labor chaos, and we got technology sort of at the nexus of that. So we can speak to that right now. So let's bring him on this show, AB. Mr. Courtemanche, welcome to Benzinga Live.
Hey, Spencer. Nice to be here. Thanks for having me.
Thanks for coming on. So I guess before we start into the real nitty gritty here, just tell us, for people that don't know, about Procore and what you guys do. And also, by the way, congrats on the great quarter you just had.
I appreciate it. By the way, I guess we're the opposite of space-based laser communication. Actually, we're much more earthbound here. No, Procore is a construction platform meant to connect everybody in construction to drive efficiencies into a highly inefficient process. So we've been around for about 20 years, believe it or not. But we've been very successful over the last few years, growing our customer base and becoming a global company and solving this this massive inefficiency that drives into construction. And you mentioned several of them, but there's a $500 billion worth of waste that goes into construction every year just because people are not connected and working off the same set of information. So lots of opportunity for us.
I'm just curious how all of the macro happenings impact a company like yours. So, for example, you guys said last week that your revenue for the prior quarter was up 27% year over year, up to $122 million. You had 481 net new customers. You guided revenue in the high $400 million range for the current quarter. I'm sorry, for the year. And so how has all of these macro happenings affected your business?
Yeah, it's really an interesting time right now, Spencer, because yes, there's a lot of opportunity and there's a lot of optimism when I talk to our customers about their future work that is what they call their backlog. And so just over the last year or so, these conversations have led to me understanding that our customers are seeing huge opportunities with future work. And then, we just had the infrastructure bill passed, over the weekend.
Right.
So then that's on top of all that. So you have all this optimism and all this work. But then the other side of the coin is massive labor shortage. Skilled labor shortage has been affecting this industry for a long time, and it's really is not getting much better. Number one, then you have these supply chain challenges. So it's optimism on one side of the coin and a lot of headwinds on the other side of the coin. But ultimately, this $14 trillion industry has got to build all of the things that we need to live our lives. So I remain super optimistic. But yeah, it's an interesting time.
I'm kind of surprised that, in doing research, on Procore and reading up on over the weekend, I was surprised that you seem to reiterate this idea that the construction industry is still behind the times, right? Still not caught up to where they should be, just in terms of technology and systems that they use. Why is that? I would think we're 30 years into the internet, right? I won't mention more, but why is that the case?
Well, so the beauty of you're right. The beauty of what you just said, though, is that construction doesn't happen inside of a fancy office like I'm standing right now. Construction actually happens outside, and you needed the internet to make it to the job site to be able to leverage all of this platform technology that's available. The iPhone didn't come out till 2007. iPad didn't come out till 2011, 2012. So really, we say the internet really made it to the job site around 2012, 2013. And so since then, it's been playing catch up. So, we've watched the evolution of technology very much tracks all of the other adoption of this digital transformation that happened in every other industry. But we are just a little late to the game because we needed the technology to be ubiquitous and available, in the most obscure places of work, which is construction sites.
I want to read you a quote that your own CFO gave on the conference call last week, and then I want to ask you about it. And he said, the industry disruption associated with the difficult labor market, inflation, and constrained supply chains continue to disproportionately distract the small and medium-sized business segment. The impact has been less pronounced in the mid-market and above as we continue to see stronger growth within our larger customer relationships. So what exactly does that mean? Does that mean that it's really, small, medium-sized businesses, construction companies, and et cetera, are the ones being hit the hardest here?
Yeah, so absolutely. So just to kind of put a fine point on that, our largest customers in general actually increased their spend with us in Q3. So we're seeing nice progression there. But when you go down market, just put yourself in their position, Spencer. Say you're a 7-person plumbing contracting company where you're running the company. So you're doing operations, you're doing sales, you're doing dispatch, you're doing all the things that need to happen in order for that business to become, effective. So you're just trying to, stay afloat in a world where you can't get the plumbing supplies you need, you can't get the labor you need to deliver on the promises you've made to your customers. So there's a lot of headwind, and it really does disproportionately impact the SMB just because they don't have the breadth and depth of heads in their organization in order to cover these kind of challenges.
Who do you work with? Who are your customers?
So great question, by the way. So this is an interesting thing about Procore, especially for people that don't follow us closely. Everyone thinks about construction as being the folks that built their house, right, or remodeled their bathroom. Well, construction is everything. It's a $14 trillion industry, and you should just look at the stimulus bill or the infrastructure bill to understand what it is. But it's bridges, it's ports, it's every manufacturing facility, it's distribution centers, it's housing, it's multifamily, it's everything, right? So, and it's also like industrials around, utility manufacturing and utility production. So we sell to owners. So think of Fortune 500 companies that are building out facilities. We sell to general contractors that are actually building for those folks. And we sell to specialty contractors that are, doing the actual work in the field, otherwise known as subcontractors. So we sell to all three of those primary stakeholders: enterprise, mid-market, and SMB globally. So it's it's a very large percentage of the global workforce is construction, and those are our customers.
From your vantage point, where are we in? I don't even want to use the word recovery, because in a lot of cases we've recovered, we've already reopened. But where are we in this cycle now in terms of just construction activity? If you want to go a step further and go like fixing the supply chains, I guess, where are we in that cycle from where you sit?
Yeah. So again, I'll go back to the two sides of the same coin, which is there's more capacity. There's more actually, demand for projects to be built than ever before. That's a fact. And now you throw on the infrastructure bill on top of that. So that will come online over time. So we have all of this, demand to have things built, but then we have these challenges. So by the way, I was flying over Long Beach recently, and I actually saw those 90 container ships out there just parked. And it was weird to physically see supply chain challenges like from the air. And that stuff's real. So I would say in general, the fact that there's all of this pent up demand to have things built is really, really positive. We just have to work through the supply chain challenges. And then on a labor shortage, what we have to do is we have to figure out how to enable the industry to do more with less. So you can't keep throwing bodies at this process, because it's not an efficient way to solve the problem, and there's no labor to throw at it. So that's where Procore comes in, is we just make everybody more efficient and allow them to do more with less.
And then I want to ask about your two recent acquisitions. I believe you've made two acquisitions in the last, I think, 2 months, give or take. Yep. Tell us about those, why, and what they're going to do.
Yeah, so we always start with trying to solve the biggest problems in the industry. And there's the two biggest problems we've talked about one a lot, the labor shortage. And that's where Labor Chart came in. The second challenge is cash flow. And so all of the subcontractors are basically financing all the projects. So if you're remodeling your bathroom, Spencer, the plumber shows up with a toilet. Well, the plumber actually bought that toilet. And that toilet, you're not going to pay him for about 90 days plus for that toilet. So the subcontractors in general have cash flow problems. So what we're trying to do is get people paid faster. And that's where the Level Set acquisition comes in. So both the labor challenge as well as cash flow challenges, getting people paid faster, are what both of those acquisitions were all about. And again, we just focus on the biggest challenges and try to drive those efficiencies into the industry.
Yeah. And I guess as we wrap it up here, Tooey, what is the next big focus of yours right now? What is the next catalyst, or what should we be looking forward to from a company like yours?
Yeah, so I would definitely continue to watch Procore expand globally. We're a global business, and there's 90% of the $14 trillion TAM is outside of the U.S. So I would watch that. We've been very successful quarter over quarter growing our international business. I would also look to Procore to be more of a data company. So we're going to be able to take this 5 or 6 petabytes of data that we have in our system and allow our customers to run better businesses, because we can actually use that data to inform them on how to grow their businesses. So a lot of opportunity ahead of us to, achieve our mission to connect everyone on a global platform. And the more you know about construction, the more you'll realize how disconnected it is. And so as we become more successful of connecting folks, we will drive those efficiencies into the market and allow our customers to run better businesses.
Actually, I have one more for you here, because you mentioned before that your largest customers had been increasing your spend and your smallers had not. Do you expect that trend to continue for the largers to continue to increase your spending and to the SMBs to maybe struggle? How long do you see that trend playing out for?
I actually think it's a very long-term trend. Now, the larger customers have already invested in solutions like Procore that allow them to do more with less. So that's actually creating a flywheel effect. So they can take on more jobs and do more than they previously could without Procore. The SMB is going to take some time because we got to work through these supply chain challenges. But once those supply chain challenges work themselves out, we believe that the biggest challenge ahead of them will be this labor shortage. But again, adopting technology like Procore is going to allow them to do more with less. So I feel like once we come out of the supply chain challenge, the adoption of Procore and a platform like Procore is going to enable them to grow their businesses and therefore solve for that challenge as well.
So you see this as a hedge against the labor shortage? Is that what?
Absolutely. In fact, that the acquisition we did with LaborChart enables our customers to do more with the labor they have and be less wasteful, so they can actually take on more work and run better businesses. So absolutely, it's a tremendous hedge.
All right, Tooey Courtemanche is the CEO of Procore, ticker PCOR. Tooey, a pleasure to chat with you. Good luck, and we'll have to have you back as this situation develops.
I look forward to it, Spencer. I'm available for you whenever. Thanks, man.
All right, I will be calling him at 3 a.m. and see if he answers his phone.
There you go. You can always call me, Spencer.
You don't answer your phone.
I know, but you can still call it. It works.
True. That's true. I can. Okay. Hey, before we bring on our next guest here, let's do a quick crypto update. AB, can you bring up our heat map, please?
Yes, sir. I can.
And because we were looking this morning, and I came in and I thought, oh my gosh, it's going to be an amazing day. Because I just saw Bitcoin, I saw Ethereum. Bitcoin was at 66. Ethereum was at like 47. Where are we now?
I believe
nothing has changed. All right.
Well, I believe this heat map is a little bit delayed.
Wait, can we refresh it though? Because
no. I mean, it's refreshed.
Okay.
I'm just saying. I think there's a delay on the price quotes on this page.
Oh, okay.
So let's check real quick. So this says that Bitcoin is essentially at 66 flat.
I don't think there was a delay. I think it was at 66 and then it went down, and I think now it's back. Corroborate that for me.
Yeah, I mean, so according to Google Finance, it's got 66. I got 66,060. The heat map showing 66,007. So I don't know.
Tomato, potato.
It's right there. Either way, strong day in the crypto markets all across the board. Not all across, but we got SHIB, which is slightly in the red, but at least holding its ground. We saw a couple days last week where Shiba Inu really dropped a significant amount. So seeing it hold its ground there is encouraging. Cardano up about 4.5%. Dogecoin 4.5% as well. Ethereum, I mean, I think this $5,000 level.
Dude, we all just need to, I think, buy some more Ethereum. I think is what's happening here.
Buy high.
I'm so beyond the point of caring about. I'm chasing it up this year. I'm so beyond the point of that. I think we need to just close our. That's what I told Mint this morning. You have to just close your eyes. Close your eyes and hit the buy button. Is how I'm feeling right now about everything. Not just crypto, but everything.
There you hear. You heard it first. Just close your eyes and hit buy. It doesn't matter what it's on, what equity, what asset, what stock, what crypto.
Do it for Hertz. No, don't do it for Hertz. But as a reminder, you can get some free Bitcoin. All you have to do is download the Voyager app, enter the promo code ZING, Z-I-N-G, fund your account with $100 to make your first trade, and they'll give you $50 in BTC right then and there. Let's see what our next guest thinks about my close your eyes and buy strategy.
Let's bring him on.
Jake Wujastyk from TrendSpider. Here he is. Where is he? AB. Jake, what's up?
What a strategy that is.
This is the part where Jake says, I can't really condone that. He's going to give us some more, I don't know, technically sound advice.
That may be true.
I know a lot of people who have pulled that type of strategy out of their pocket and made good money. So, to each their own.
Because every time I think a stock is like come to like doing something dumb and come too far, it just keeps on going. So it's like I don't know, man.
If you're looking at Bitcoin right now, if we can close above this previous all-time high, my next target is about 87K on Bitcoin. So you don't really have any price action to look at to the left anymore since we're at all-time highs. So this is when you got to pull out the Fibonacci extensions, and the most relevant recent measured move is this move from April, the previous all-time highs, to the July low, So, I mean, I get it. You know, I could definitely see it making a 2017 type of move into December. We'll just have to see. But yeah, I'm very bullish on crypto right now. And Ethereum too, same thing. And a really good case study on Ethereum using the raindrop chart on the weekly candle over the last few days. So, we finally saw this breakout here through this ascending triangle resistance, and notice what we had. We had quite a bit of volume actually above this previous high. So what that tells me is that for anyone that was selling Ethereum and dropping supply onto the market, there was somebody there willing to buy those shares at the high of the week, which is a lot of the time very bullish. So not shocked at all to see Ethereum making moves already into the beginning of the week. And yeah, I could see Ethereum easily going to 6K with this Fibonacci extension above right around 6,032 or something. Not going to talk right to the dollar. I'd say anywhere from around 5,900 to around 6,100 is my target above.
59 to 61. All right. Okay. We're with you. So we got 80, what again on Bitcoin?
87.
87 on Bitcoin. Okay. All right.
So,
Nice.
It's not looking bearish. Hitting all-time highs is generally not a bearish thing. So, the thing is, crypto is really just fueling this risk-on sentiment in the markets. You know, seeing crypto really move into last night before the markets opened. The fact that we were breaking to pretty much all-time highs or right below them, or at least for Bitcoin, was telling me that risk-on is definitely the vibe that we're getting in the market right now. And it's really interesting with this infrastructure bill. You didn't see the markets really responding, but you saw these individual names responding. And that's exactly kind of what I was anticipating. You know, you've got this money flowing into individual names. The markets are a little overbought right now, especially if you look at some of the Fibonacci extensions. You know, if you're not a believer in fib levels or extensions, just look at this daily chart on SPY and notice where we've had trouble getting through 2 days in a row now after this huge move up. This 1.618 extension right above. And once again, it didn't hit the exact level. You want to look at these zones and notice that we had this orange zone highlighted around the actual fib level. And so that's how you want to use these levels. You're never going to, hit it right on the money. It's going to be a zone. So SPY, doing its thing. Qs, same thing. They're really not moving at all because all that money is really flowing into some of these individual names that are really looking good from the infrastructure news. Blink,
yeah, it's flowing into solar, it's flowing into EV, it's flowing into even cannabis is having a good day, as the chat's talking about, right? It's flowing into steel.
Mm-hmm.
Yeah,
you got some rotation, you got some massive rotation going on, and that's that's what makes the market. So on the Q side of things, I think we should pull back. I mean, it would only be healthy at this point if we pull back maybe all the way down to around 390. That would be healthy. But if you look at the measured move from the previous time we broke out of all-time highs back in June, we did have some pullbacks. I mean, look at this. We had a couple of times where we had some decent pullbacks, but what happened? We kept hitting higher lows and we kept moving up for some time. So if we want to take that measured move and apply it to this most recent move that looks very similar, that would put us in the 420s by mid-January on the Qs. So it's really hard for me to be bearish right now. We're entering a pretty strong seasonal time of the year as well, especially for IWM. Some crypto names, Ethereum especially, has a really high win rate for December. So it's, to me, it's really hard to not agree with your close your eyes and buy whatever and look at it in a couple months. That's not advice, but I do get the sentiment on, why that's the case. The EV names are interesting. You've got a lot of these electric vehicle powering type of plays moving. Blink. This is one that I've really been keeping an eye on since the 2850 area or so, and we finally got just an absolute rip today. So congrats to those that were in this one. I don't think I'll be selling this anytime soon. If you look at the long-term chart here, I could easily see this hitting all-time highs, and the all-time highs are up here in the 60s. So if anything, I'll probably just be adding dips, especially with this type of monthly breakout. I mean, this is just incredibly strong. And the thing is, we're just breaking out. It looks like, Blink is up a ton at 21% for the day, but we are just starting to break out here on the monthly chart. So I think this is probably going to go to the 60s plus within the next couple months, simply due to the fact that these names are getting hot again, and it's looking a lot like November of 2020 and December of 2020.
There you go. Yeah, Jake, I've got a couple, charts I've been watching today. I know you've got some of your own as well, but I was wondering, can we pull up Sunrun's chart real quick?
Mm-hmm. So Sunrun, I'm not familiar with this one, but I think I've heard the ticker once or twice. But same thing. I mean, we're just starting to break out here. The government makes the market. If they come out with policies that support a specific type of industry, then they're the ones making the market. So it's pretty obvious that these types of plays, anything electric or clean energy, is really probably going to take the stage for more than just today. I can see this being a longer term cycle move rotation into these names, into EVs, marijuana. I mean, marijuana is definitely getting hot. I just keep adding. I was adding the dip like the last 2 months, and people are wondering, why are you buying this going down? Well, I don't know, because that's just what weed stocks do until they don't. So all these names are looking very strong into the end of the year, into January as well.
Got it. Another one that I know we've looked at together that I'm watching right now is Penn. Obviously, Penn had some news last week, but it's at a point right now, and I'm looking at just like the daily chart on some 5-minute candles on my screen, and it's looking like it's either at this point where it's going to reverse or drop lower. Either way, it could be setting up for a trade.
Yeah, so Penn's an interesting one. You had the earnings, but then you also had the weird news about Dave Portnoy last week, which definitely did not help the stock. For me personally, and this is just kind of the way I look at candlestick price action, I do not like any time that you're trading within a previous wick. So for example, here you can see that we're kind of trading in last week's wick. So for me, I wouldn't even really I'm kind of over gambling stocks for now, because there's so many different competitors entering the market. It's really hard for any of these companies to really get any type of competitive advantage, just because there's so many companies entering the market. So it's one of those names that I did play back in August, and it was a pretty good run there for a couple weeks. But I just never like to see, and the same thing with the upside. If you gap up into the upside, into a wick, that's always a pretty strong signal. So GE is a good example of that last week, but I would need to see how this weekly candle closes before I even really take a look. But your COVID low anchored volume weighted average price, pretty much we're just measuring the volume by volume weighted average price from the COVID reset in the markets. And that's down here around 54.50 to 55. So if I were to take a wild guess, I'd probably say that's where it's going short term. But we'll just have to see. I do know though that over the last few weeks, these names have not been doing incredibly well, and you generally want to look at the names that are moving with the market and showing strength. So we'll have to see what happens. You've pretty much got 2 inside days here from this huge candle down. But if I were to guess where this is going, I'd say mid 50s.
Yeah, I mean, when I was looking at the chart, I was like, okay, this is either going to bounce off here and start coming back up, or if we lose this kind of spot where we're at right now, and again, I'm looking at the daily chart, so a little bit different than it looks like. I think that mid 50s call could be right. So when I said it could be set up for a trade either way, definitely on the short side is a possibility there. So Jake, what else are you watching today? Anything else on your radar?
Oh, for sure. So one thing I would mention, if you look at the pin on the 65-minute chart, this November 4th capitulation candle, you are pretty much trying to hold this anchored volume weighted average price from that candle. So this could have some decent risk reward here, at least for maybe a day trade or something. So it is holding the levels that it needs to. I will have to say, I am someone who will literally watch a stock for weeks or months before I enter it. And MU is the stock of the the day, if you want to call it that for me. GE was last week. We did get a nice bounce in GE. We'll go over that one in a second. I don't think it's done, but it's also not moving like a lot of people thought. It was a little worrisome to see how many people got bullish on GE over the weekend. That was a little bit of a red flag for me, kind of, too many people anticipating a move. But all in all, MU is the main thing that I'm watching right now. I'll give my thesis on why. So here, if you look at the MACD, and I'm sure you're not going to see a lot of people draw any type of trend lines on the MACD like this, but it's really interesting to see. One, we're breaking out of this long-term resistance. So even though it looks like MU's had some really strong days, we're just starting to break out now. So, I'm thinking if we were to take a wild guess where this lands, I'm thinking around $80, and I'll share that thesis here in a second. But on the MACD, I mean, look at this. You've got these lower highs on the MACD for how long now? We're finally breaking out of it this week in the last few days. So MU, I mean, look at AMD, look at NVIDIA. These names have moved huge, and this is definitely a laggard. I've traded MU in the past, and it's really been a good one to trade. Now, the reason I have an $80 price target, short term at least, is you'll see here that we have the volume weighted average price right around 78.30 or so. But notice here as well, if you look at this wick here, so this was from June, you've got this wick that actually did bounce above the anchored VWAP a little bit. So I want to use that wick as a little bit of flexibility above the anchored VWAP. So as I mentioned, I'm not looking at anything that's an exact price level, but what I'll do is I'll add another VWAP offset. So what I'm doing is I'm actually adding another VWAP X% above. Now, I'm not sure what that is. Let's just take a random guess here. So what we're trying to do is we're trying to take into account this wick right here to include that in the anchor VWAP. So the anchor VWAP is around 84. This moved up to around 85. I don't know. Let's give it like a 2% offset to the upside. And you'll see here that by doing that, we now have more of a zone. So you can see here, it would maybe even 1.5 would do because you can see that wick is a little lower. So yeah, perfect. Now we've got this wick that is also being included in that anchored VWAP zone. So now, my target becomes pretty much this general area. So around 78.20 to right around 79.50 or so. And so that is my target above for MU. You can see here on the weekly chart, the MACD is just starting to cross. And then if you look at the longer term chart here, we're looking at the weekly chart right now. This thing has a history of absolutely just melting up when it finally goes. So if you want to just take the measured move of this previous breakout and apply it to this big move that we had about 2 months later, you could probably anticipate anywhere from a 40 to 50% move in MU in the next 2 months, just based on this measured move.
Wow, that's a big move
for a Micron.
Yeah. And, a lot of people hate the stock because it hasn't been moving as well as AMD or NVIDIA. That's the exact time that I want to buy something, is when everybody hates it. So MU is one that I did enter calls this morning, pretty much right off the bat. And one thing that's really interesting is if you are trading options, or even if you're not trading options, look at the options chain. This is like the biggest way to get an idea if the market is looking for a move. So BLNK is the first example. BLNK, I started buying the $35 calls for January about 3 weeks ago. And you could tell that the premiums were getting more expensive even when the price was dropping. So I initially bought the BLNK calls around $28.75, the spot price. That's just the common stock price. And I bought those calls around $1.26 per contract. What happens? The next day it goes to $30, and those contracts went to around $1.60. And then 2 or 3 days go by, we drop all the way down to $27.75 or so. And then once we moved back up to 30 about 2 or 3 days later, the contracts, the same spot price, right? Before the contracts were trading at 160 when the price was $30. Then as time was going by, so generally, theta should be kicking in a little bit. those same contracts at $30 spot price were trading at $2 a contract. So anytime you see the premiums holding their value or even gaining value while the price is dropping, then getting back to that same common stock price, that's always a big kind of warning sign that this is probably going to make a big move. MU, same thing. I started buying calls this morning for the January 21st, $80 calls. And I was getting outbid almost every time I put an order in. I mean, I was putting it at the ask almost, and I was still getting outbid. And that was around $2 and let me make sure that's I think it was
$2.
No, sorry, $3. Well, so the contracts, the January $80 contracts were.
Dude, that seems high to me, but it's not. I guess. All right.
I don't know what they're at now, but I think I started bidding on them around like $2.25, $2.30. I could be wrong. I'll have to look at my orders. But anyways, I kept putting in orders and they kept getting outbid. And so I was like, okay, this is weird. The price is dropping, but it was $2.32, $2.34 was the first purchase I made on the contracts. And I just kept adding them because it was breaking out. I think those contracts have to be over $3 now. So
what strike were you looking at?
$80 calls for January.
310 right now I'm seeing. So are you just buying straight calls? Are you doing like any spreads or anything like that?
No, just trading the premium. So I'm instead of buying the common stock, I'd rather just buy the premiums at a longer out date. Now, I saw a lot of people buying the November 26th calls, or even earlier than that. So generally, when we have an impulse move like this, almost 3% move on MU, that's when you kind of want to take the profit on those shorter term calls. Because what if MU pulls back 2% tomorrow? Those calls are going to get destroyed. But the longer term calls, like the January calls, I'm happy swinging those because I have time built into the premiums. So I did mention, hey, if you're up and you don't have that long-term contracts, maybe you take your profit. But for me, I'm definitely holding them. My target is that $79 to $80 area above. If we get a really strong impulse move tomorrow, another 2 to 3%, I'll probably take some off the table because I went in pretty heavy. So it's been a pretty good trade so far. And you want to lock in those profits. So what I would look for is maybe a 2-week move up like we had here, maybe a pullback to retest the resistance, and then a very strong move into the rest of the year. So MU, definitely keep it on your radar. MACD is just starting to cross here on the weekly chart. We're breaking out of this really, really long-term kind of just slow grind down. So all in all, it's hard for me not to be very bullish on MU right now. And this is one I've been watching for a couple weeks, and I finally kind of decided today was the time to get in, and so far so good. So we'll see what happens the rest of the week into next week. But GE is another one. I mean, if you look at GE, we mentioned this last week as kind of a potential trade idea, and this is kind of that same exact thing I was talking about with MU, right? So notice what we had, or not MU, PEN. We had the opposite happen, right? We opened up in this previous week's wick. We pulled back and kind of retested where it closed at the week before, but then we pretty much moved up to the top of that wick. So it's the exact opposite of what we went over with PEN, where, I think PEN's probably going to retest that wick below from last week at least, and then maybe reverse from there. But GE is one that we did try to break out this morning. I think we hit a high of like 110.25 or something. But all in all, not great price action. You've got a lot of people chasing the EV charger names and the EV names. So doing kind of what it does, not moving great. This is when I took quite a bit of profit on last Friday on that Pfizer news, but I still do have a pretty large position for January, the 115 calls. And, I'll probably look at maybe stopping out on my profit if we break below 108 or so. But I do think we're probably going to make a pretty big move on this one once things finally start to get going and the market digests some of that supply that came on the market today.
Got it. So Jake, I mean, I follow you on Twitter. I'm sure a lot of our audience does as well. It seems like a lot of charts that you're looking at, you like finding those like descending triangle patterns. Is that just something that you found over time being like a good indicator for a breakout?
Yep. Because the ascending triangle essentially shows you've got higher lows, so the market is pretty much has participants coming in and buying those lows at a higher level. So the price is slowly starting to move up, and then you've got this previous area where the price has just had trouble getting through now for like 2 or 3 months. So as we get back up to this level, that's kind of what I look for a breakout. Crypto does this all the time. Crypto's got some great breakouts using an ascending triangle. We just saw it on Ethereum when we were looking at the weekly chart. So yeah, these are definitely things I look for, but I also look for the falling wedge setups too. So MU, we've got a falling wedge set up here, and generally you'll have breakout buyers come in, and that's what kind of helps this become a self-fulfilling prophecy, because you've got these new participants coming in the market as everybody sees this falling wedge breakout take place. So ascending triangles and falling wedge breakouts are what I like to see. However, I would prefer to see a falling wedge that has higher lows, right? So like here, you've got this falling wedge, but you've got these higher lows over the last 2 years. If you go look at something like Tilray, which I am bullish on, but my point is like I guess it depends on what time frame you're looking at, because you do have this falling wedge here, and you do have these higher lows pretty much from this 2020 low. But you'll see here, same thing. I mean, you've got the falling wedge, you've got a lot of momentum kicking in for these weed names, and that's how I simply draw one of these charts. I'm just connecting the wick to wick, and then I'm kind of just pulling it up to include some of this other price action that didn't test the exact wick to wick trend line below.
Got it. And then another quick question. So our next guest, Chris Capre, he likes to look at the option flow as well. And I couldn't agree more that it's just a great way to, get some extra insight into the sentiment of certain stocks and market overall, where moves can be expected. Where do you go for that option flow?
I do not use it at all.
Oh, you don't?
No, and nothing wrong with it. Everyone's got their own way of looking at the markets. I personally just have a problem with options flow because you don't know, what's on the other side of that trade. For example, what if somebody's selling covered calls and making it look like it was just a big order? They may have $1 billion position, and so a $500,000 call purchase or sell, and a lot of the time it's kind of hard. You can use like, okay, was it at the ask, was it at the bid, to kind of decipher what side of the trade it was on. But for me, I've been burned a couple times using options flow, but there's also been times where it's worked. So it's one of those things that I just have never really used in the past, and so it's just not something that really changes anything for me. For example, like I'd much rather look at the charts. I'd rather look at the options premiums. Are the options premiums gaining value even though the price isn't moving much? And then I'm really looking at rotation. Okay, this sector's gone up a lot. Where's money likely rotating into? But I mean, a lot of people use options flow now, and I think it's worth noting when you have options flow over, honestly, like over 1 or 2 million, because I see a lot of.
What were you saying you saw in Micron beforehand? Didn't you say you saw like a lot of calls come in, or is that just because you were saying you were getting outbid? Then you knew there were a lot of calls coming in.
Yeah, I was getting outbid on the calls. So every time I put in an order near the ask would rise, and so it's like, holy crap, somebody's definitely wants these calls. I wasn't necessarily looking at the volume. I was looking at the volume a little bit. Within 30 minutes of the open, those calls already had like 1,000 volume. So there was definitely interest in it. I just wasn't looking at like an actual order. I was overall looking more at the sentiment of the volume on the chain. Like, okay, the calls are outpacing the put volume by like 10x. So I do look at those types of metrics. I'm just not necessarily looking at like sweeps that are worth 50 grand. That's something that drives me crazy. I'm all about flow and people using it. I've seen a lot of people use it and make good money. But one thing is really tough for me to, see is people who are posting, oh man, look at all this flow. And it's just like, it's like $20,000 orders on the chain. you don't even have to be a huge retail trader to show up on an options flow tool. So I'm really looking at like, okay, if somebody's buying $2 million worth of a 2 week, 3 week out expiration, then it's like, okay, that's interesting, because a lot of the time I think these guys will just front run their orders. So let's say that you're about to buy a ton of common stock. Well, why not buy the calls before you start loading up on the common stock? You already know you're going to move the price up, and you're going to kind of get screwed on moving the price up from how aggressive you're being. So you might as well front run your own self by buying the calls, because you know you're about to buy a ton and move the price up. So you're almost hedging against, what you're getting filled at. So that's always interesting to see those types of orders for sure.
Got it. Yeah, and just because we were talking about it a minute ago, I was watching Penn. It looks like we did break those levels we were holding earlier, and it moved down pretty quickly. I don't know if we had news or something, but
just moved down. Yeah, that one's hard, just because you've got all these infrastructure name plays. So it may not even be that there's really heavy selling going on in Penn. You may not have any buying interest because everybody's trading FCell and BLNK and all these other names that are really catching a bid today. So we may not necessarily be moving because sellers are driving the price down. We may just be moving because all that interest is in the EV plays at the moment today.
Yeah, I 100% agree. Like you said, the market's all about just inflows and outflows, the cycles. So right now we're in that moment where everyone is looking at those EV stocks and other companies that may get a boost from the bill. So maybe just right now that the gambling stocks are on the back burner for a lot of investors. Real quick, I missed this earlier, but we did get a super chat for Aspen, ticker ASPN. So we got like about 1 minute left. So we'll do the quick breakdown on this one.
Aspen, I have no idea what they do, but they're clearly in a pretty strong uptrend. So for me, the first thing I would do is just pretty much start my trend zone here. And I would probably ignore this wick just because it was probably just some illiquid move. But here, this is kind of the trend line that I would draw. So like here, you've got a ton of different data points on this trend line. So if this thing continued to move up, this may get to the 61, 62 area before any type of meaningful pullback. You've got a recent breakout here, kind of this bull flag. So you've got, just these two descending trend lines that we broke out of. So yeah, it's looking very strong. If you're getting higher highs and higher lows, that's not a bearish thing.
Got it. Oh, and it looks like someone shared in the chat, so I don't know if this is true or not. It looks like there was news actually that came out on Penn that the Barstool Group will be excluded from competition for New York betting from the New York Post. So I'll get that story pulled up in a second. But Jake, where can folks find more from you?
Yeah, TrendSpider.com if you guys want to check out the actual platform. So I'm using TrendSpider for all of these charts. Now, if you want to look at some of the content that I put out and some of I like to do trade ideas, because at the end of the day, I'm posting 20 plus charts a day. There's no way I am able to enter all of those trades. It's just not efficient. So I like to post trade ideas so people can take those charts and make them their own. I really don't like posting any type of particular options calls. Like, so for example, today I didn't post my MU trade publicly because I don't want people blindly following me. I want people to look at the chart that I post and come up with their own thesis and make the trade their own. And that's, you'll feel a lot better about your trade if you decide the contract, the expiration, the strike, all of that on your own, rather than just blindly following somebody on the internet. So I like to kind of help people become fishermen rather than just, trying to catch fish for people. So my Twitter handle is TrendSpider_J. Lots of trade ideas, lots of educational posts that I put out. And if you want to check out just the actual platform, TrendSpider.com is where you can learn more about that. And we have a ton of YouTube videos as well. Just TrendSpider is the name on YouTube as well.
Beautiful. All right, Jake. Well, thank you for joining us today. We will have you on every Monday at 1 p.m. Just going over charts. And if you have charts that you want Jake to take a look at, just tweet at him. Maybe he'll have time. Who knows? Jake, again, thank you.
Hey, thank you guys. We'll see you next week.
Sounds good. All right, y'all. That was Jake from TrendSpider. Like he said, the Twitter handle is TrendSpider_J. You can also go to TrendSpider.com to check out the platform. We've got another guest that's also, on the technical side. So we're just ripping through this whole hour from 1 to 2 Eastern doing technicals. Without further ado, let's go ahead and bring Chris Capre on. Chris, how you doing?
I like the new intro. That's great.
You like that?
Yeah, it's got some verve to it.
Only the best for our wonderful guests such as yourself.
Yes, as the late Neil said.
Yep. Did you have a good weekend?
I did actually. Yeah, got to do some hiking in the Tahoe Mountains. So it's catching some late fall sun right now. So try and take advantage of it before the snow hits.
Beautiful. Yeah, you gotta get that in now before it's too late.
Mm-hmm.
So, Mr. Capre, what is on your watch list for today?
All right, so let me share screen here, and we will take a look at the MU that Jake was talking about. One of the things Jake was mentioning is that he's saying, you have a hard time, like if you see, 500,000 or $1 million come in on a particular call or something like that, you don't know if their calls being sold or bought, and that's true. But you can also, there are tools that can help you find out whether those deltas are increasing or not. And so if it's long options, then the deltas are going to increase. And if the deltas are decreasing, then they're selling those options. So it's important we understand that. I just see that flicker in there. Oh, that was
I saw that too. I was like, I can't deal with that. All right, looks like we're fixed now.
All right, once I move the mouse over, it seems like it's all good. So, okay. So, yeah, there are ways to understand order flows. It just takes a little bit of time to understand dealer gamma and things like that and hedging requirements. But with that being said, hard not to talk about AMD today. Very strong. We're going to take a look at Trade Desk and AMD. So AMD had just a slew of positive, catalysts coming out. And if you look at the Benzinga app, you can see just a host of them here. So first off, Meta's Facebook is going to use AN chips in their data center, which they're going to need a lot more data centers for what they're looking to do. Microsoft is going to use the AMD Milan chips in Azure. AMD during their online event had talked about they're coming out with a new GPU for AI processing. There's just a lot of news catalysts out here, and the result is pretty clear. It's 108 million shares on the day. Its 10-day average was 66 million. Prior to today, the 10-day average was 45 million. So the volume of shares traded today alone has pulled the 10-day average up significantly. And when you see that the volumes of shares traded is well above the 10-day average, that means a lot of eyes are on this stock, not just retail, but institutional as well. So you can see looking at the 5-minute chart below, very strong rip on the open, very strong volume, and then a big surge once we had, let me get at my trusty pen, you can see it right there, big surge of volume here, and the volume kind of architecture or structure has been mostly higher, like this right here. At the very end now later in the session is where it was before. So this really raised that kind of volume architecture, suggesting there's a huge surge into this. And the stock has ripped up, it's almost 10% up on the day. So very strong move on the day, huge amount of volume shares. And the options flows are absolutely gangster. So prior to today, AMD had about 1.6 million calls, 1.47 million puts. Today alone has traded 1.55 million options, and about 3 out of every 4 options are calls. So positive news catalyst, boatload more calls than puts. It's just, you're talking half of the entire options in the universe were added today alone. That's insane amount. That's like not common at all to have 50% of the total options in the universe increased in one day. So there's an aggressive amount of option traders looking at AMD. Let me pull this chart down here so you can kind of take a look at the chain here and things. Okay. So what do we see in AMD? So here you are. Here's your 1.2 million calls, 345,000 puts. When we look at the short dated, you can see that there is, is that 240,000 of this 1.5 million calls. So that is 1.6. This was roughly 15, 18% of the total options are traded at these two strikes by volume, the 150 and 155. So we can kind of tell that that is kind of where it's going to pin for the day. Anytime you see an exorbitant amount of volume concentrated at one or two strikes, that usually becomes the pin. There's just so much liquidity pulling it into that area that you're going to see a lot of the price action kind of just hover right around that. And where have we been, for the last, after this rip here, and we've consolidated between 148 and 153. So we're cycling right around that, kind of 150, 155 area. So that's the first thing I like to note. The second thing is you can see that there is a decent amount of volume here, 80,000 calls at the 160. And it looks, trails off by half as you start getting 165, 170. And then there's still a decent amount of 180. So you look at that and you say, okay, there's not as much fuel to get beyond 155 on the day, but there is still some fuel trying to pull it higher, and it could try and start dragging AMD higher into that. So IV's pretty elevated right now. I think this turns into a multi-day runner for the week. Today's Monday. We have a large amount of calls being traded on a Monday on a positive news catalyst. Theta decay is going to be very small. It's decent. 58 cents, 63 cents, but we're not talking like $2, $3, $4 or something like that. So I'm looking at it like if you're long the 150s, you're going to lose maybe 10% of your total premium in theta. If this could run up to 155, it's not a big deal. So I'm looking at this as I think AMD is going to be supported today, tomorrow, maybe Wednesday. And then we're going to start to see, at least for this week, a lot of these short-dated options start getting monetized. That will start to, kind of put a headwind into the stock as people start taking profit from their long calls. If we can't get past 155 strike, then traders are just going to say, I'm done, close up my calls. That's it. Don't want them to decay anymore. Let's do that. That takes away the bullish call fuel out of the market. And then probably Thursday or Friday, you should start to see AMD kind of topple off and start to pull back a little bit. But is that all the fuel that AMD has? Is it just this week and done? Well, when you start looking at the longer dated options, you're seeing some really good volumes, 140. And again, top strike for the next week's options, the monthly OPEX is again 150. And you're still seeing some decent option between 155 and 165. There's even some options going all the way out to 200. So you look at that, go a little bit further out, and again, you're seeing a large cluster of options by volume at the 150, 155 strike, December and January. So traders are basically saying, look, we don't think this is a one and done. We don't think it's just rising up to 150, and then this is going to collapse all the way back down from where it came from, the low 140s per se, or even lower. They feel like option traders are saying, hey, look, we feel that 150 is now going to kind of be a pin across several months, looking a few months out. That's why you're seeing not just short-dated interest or not just next week's interest, but you're seeing December and January expiry. That tells me option traders are raising their levels up. And over time, this will continue to fill those calls higher and higher up. So when you look at that, it's hard not to like, the current levels. I personally will wait for a little bit of a dip in AMD, and then I'll look to get long. If AMD wants to give me a dip to, say, the monthly view up around 136, 140, I'll gladly take that. I will gladly take that. My one concern, and this is the one concern about AMD, is that the stock has appreciated 50% in the last 6 weeks. And there has been an exceptional amount of options, a lot of call buying over the last several weeks, like 25 billion in notional just in call buying, which is just an insane amount. And it's concentrating in like Tesla, AMD, and NVIDIA. I think there might be a little bit of a pullback because of that. I think this speculation, this leverage starts to kind of reach a little bit kind of too high a pricing. We get a little bit of a pullback. And I think that will probably happen after the November monthly OPEX. Pulls back a little bit, and then it'll give us a nice pullback opportunity to try and target 150 or higher on that. maybe AMD tries to reach 160, 165 over, November, December expiries. So for me, I'm going to wait. I may trade it short term this week if I can get a little bit of a pullback. If not, I'll wait to the November OPEX, let all these calls kind of cycle out of the market, get monetized, pull back a little bit, and then look to get long for at least the December or January expiries. So that's what I'm looking at in AMD.
Got it. Yeah, I mean, all these recent movements in like the semiconductor stocks have just been insane. Whether you're looking at Nvidia, AMD, we were talking about Micron earlier, so definitely got to keep your eye on these.
Yeah, it's these three names are attracting all the attention right now. And, any sort of like semiconductor chip type makers, they're attracting a lot of attention as a whole. When I look at the flows, it seems like it's a combination of, single, like contract options, which is retail traders. But you are seeing some institutions get involved in this as well. There's just a lot of speculation going on right now, and you're seeing all these names kind of fuel together. Tesla, AMD, Nvidia, they're all kind of being fueled right at the same time. There's just a lot of speculation. And I honestly think that part of it has to do with Jay Powell and the Fed, their last FOMC. They kind of gave the all clear. The markets had built a base after that pullback and it started to rally. And I felt like markets are saying, okay, we're probably good for the rest of the year. Let's get long for the rest of the year. That's what I'm seeing happen. But a lot of these flows are short dated. A lot of them are kind of coming in on Mondays, expiring the end of the week, and then resetting the next Mondays. That's why you're seeing Mondays tend to be very strong days for a lot of these stocks.
Interesting. I did not know that Mondays tend to be, stronger for some of these stocks. All right, Chris, anything else on your watch list that you're looking at today?
Sure. Hard not to look at Trade Desk. Beat earnings. Not gangster beat, but enough. And they also beat on revenue. Their forward guidance was slightly positive. So they really kind of got all three of their earnings looking good. And when you look at Trade Desk, it's hard to kind of deny this. I mean, you're talking from 70 to 88. What is that? 29% move in one day. And you look at the volume traded, 5 times its normal 10-day average. That's huge. That is not common. So for a stock that normally does roughly 5 million shares on a day, it's up 500% in total volume. That's a lot. Now, the question is, does Trade Desk have the same kind of future-looking option flows that we see in AMD? Well, let's take a look at that. PD, and let's pull that out. So prior to today on Trade Desk, there was about 320,000 calls, 324,000 puts, 640, 650,000 options. Today alone is traded 230,000 options. That's about, almost 33%, close to 40% of the total options in the universe added in one day. That's not common. And as you can see, about 170,000 calls, 60,000 puts. So about 3 out of every 4 options has been a call. Now, we do see, of course, a lot of short-dated interest. Right here alone, just these 4 strikes, you're looking at 20, 28, about 70,000 roughly. 70,000 of that 230,000 options. So about 1/3 is just calls that are short-dated. You are seeing a consistent amount of puts. My guess is some of this is cash secure put selling. I seriously doubt anybody's getting aggressively, thinking that all of a sudden this is going to pull back to 55. Seems unlikely. So it's probably people targeting cheap premium, almost free money, basically. So when I look at that, okay, short dated looks good. There should be some fuel for Trade Desk. But when I start to extend out, it's not quite as exuberant. You start to see the volume trails off a little bit. Now you're looking at, instead of 70,000 options across those 4 strikes, you're looking at maybe 25,000. So it's down by about 1/3. And then as you extend a little bit further out to the next monthly OPEX, it drops off dramatically. Now we're looking at less than 10,000 amongst the, these 4 strikes. So we're not seeing the long dated interest in Trade Desk that we are seeing in AMD. We're just not seeing that. And so that tells me Trade Desk is probably good for some gains today, tomorrow, Wednesday. But then Thursday, I wouldn't want to be taking any bullish bets because a lot of these short-dated options, they're going to start to get monetized People will close them out for profits. That takes the fuel away, and we'll see a pullback on this. So I look at Trade Desk. I think there's some good plays for today. Maybe wait for a dip back to session VWAP. If you look at weekly VWAP on this one here, not far. It's like right almost at the same price. So maybe 85, 86, good for long stock, maybe good for long options. But if you notice, there weren't many strikes beyond 95. And here's why. Here's your resistance. This is your prior all-time highs. We spent less than 2 weeks above this entire price here. So because of this major resistance, traders are looking at that saying, I don't want to take option bets beyond that. AMD's in price discovery mode. It's at its all-time highs. So they have a little bit more freedom to start picking higher strikes. So I think at best, Trade Desk hits maybe 95 this week. And then I think come Thursday, Friday, this actually could be a good fade for Friday, Monday kind of thing.
Interesting. Yeah. It's just crazy. All these different, like there's a few of these stocks out here that are up. I mean, Trade Desk is almost up 30% right now. I mean, it's just insane, especially for a stock that's a $40 billion market cap company. You typically don't see 30% days. But Chris, I know we've spoken before about Airbnb, and you've mentioned it as one of those stocks that you liked long term as a potential company to kind of have that like transformative impact on its industry. And Airbnb posted great earnings last week, or the stock certainly liked it, and it went up about 10%. From a like macro standpoint, so I actually went in and bought. I have been meaning to buy Airbnb for the past 6 months, year or so, like however long it's been public, but never had. And then once it was up 10% after the earnings, I was like, all right, I'm gonna get in now. But it seems like why is sometimes the stock will go up a bunch after earnings and then continue to move higher from there?
Yeah, so there could be a bunch of reasons for that why it would continue to go higher. If you see a lot of strikes move up in terms of volume, then that's just going to bring the support levels up. If you don't see if you just see short dated option flows, but nothing next month or further month out, then you're going to see kind of a push, but then those options are going to get monetized because they have massive theta decay being short dated. So it takes the fuel out of the market. Hence why a lot of these things after great earnings can pull back. But if you see them kind of climb and then just keep going and layering up, most likely it's two things. One, you're seeing longer dated options, 1 month, 2 month, 3 months out that are above, the current prices, or you're just seeing the strikes move up. And if you see a big concentrations of open interest and volumes move up on the strikes, well, then that's raising the support level. Before the earnings, they probably could have had strikes, 150s, 160s, 170s. But then post earnings, a lot of these strikes could have gone up. I don't know if you were a Sky High Stocks member. That's our long-term investing service. We've been long this since like the 130s. So we're up like over 30% on this one right now for our long-term.
And you still like it? You still like it long-term?
Yeah, it's hard not to. Hard not to like Airbnb. Sure, we're encountering resistance, things like that. But in terms of long-term kind of thing, it's just hard not to feel good about it. So let me pull up Airbnb. I hadn't prepared data on that, but let me pull up Airbnb.
I know. I like to just keep you on your toes.
All good. That's what I'm here for. So prior to today, 280,000 calls, 299,000 puts, so roughly 600,000 options. Today alone, we've traded 180,000 options. And you're talking 5 out of every 6 have been calls. That's pretty decent. Now, there could be some of these calls that are taking some profits. So let's pull this over real quick. There we go. So you can see this is where we're at. Now let's see how much of this is short dated. What was it? It was 180,000. So 38, 48, 58, 65, probably about 80,000 on the call side. Not much on the put side. Not a lot of bearish traders short dated. Everybody's still very bullish. So you look at these strikes, you kind of look at that and you see, okay, decent interest between 205 and 220. Okay, so decent. 75,000 roughly. Half of the options are literally short dated on the call side. So that might put some short-term pressure as we get Wednesday or Thursday. Now, is it translating into longer dated options next week out. Not so much. This is maybe 25, 30,000. And if we go to December, not as much. So what can I deduce from today's option flows and activity? Mostly short dated. That doesn't mean that there's not long dated support on this. It's just showing that, hey, for today's option flows, these are just short-term day trades for this week type option. That's what we're seeing. If you do look at the largest open interest though, 250. And if we go to January, you're also seeing largest by open interest, 200. So, and you do see some at 170. So we're probably going to, if this were to pull back, 175, 170 becomes a really, really good support if you can hold options till December or January or something like that. We're encountering resistance here. This is all-time highs. So I'm not surprised that beyond the short dated, you're not seeing next week or anything out above that. Probably because traders are expecting we'll hit this, we'll pull back, create a higher base, and then rip higher. But overall, I'm still bullish on this. I'm still bullish on Airbnb for sure.
Yeah, I figured, hey, if I don't get in now, I'm gonna miss another move up at some point. So I knew once I got in after the 10% after earnings that I could be looking at a little short back or a little pullback in the short term. But I'm comfortable with that and more of a long term thing for me. Me just thinking, hey, in 3 to 5 years, I think this stock is going to be higher than it is today.
But I think by a lot. I think by a factor of 3 to 5 at least.
Wow.
Honestly, if it does pull back into the 180, 170, I would consider adding some size. Just something to think about. I would consider personally adding some size. I think that's a great location. And you're seeing traders that are filling up those strikes higher up. If it does pull back there, look to add a little bit of size to that.
Yeah, I love that. If my initial position, I get it a little expensive, that's just my initial position. I have different ways I can play around with the position to lower my cost. And so, yeah, I mean, I will definitely be watching this Airbnb position, looking for that 2 to 3 to 4 bagger like you're talking about.
Bagger. Airbnb could be a 10 bagger in 5 years. It could be that. If they continue to, because generally when you see disruptors like this that tend to have massive valuation gains, it's because the incumbents have an incredible amount of inertia in what they're doing. If you look at Marriott, you look at Hilton, look at all these hotels, they've been around for a long time, some of them over 100 years. Are they really doing anything different than what they were 10, 20 years ago? Not really. Airbnb has completely changed the kind of hospitality, hotel, stay at a, different location type experience. Some people, maybe they do want to stay at a hotel, but some people are like, I want to go to the neighborhood where most people live. I'd like to have a kitchen where I can cook my own food if I'm staying there for a week or something like that. Airbnb is just doing so many different things that hotels are not doing, that kind of separation from the incumbents, which aren't doing anything new, creates opportunities for disruptors to come in. And Airbnb is that. And if you look at a lot of people that have disrupted certain spaces, they've often produced, 5, 10x returns over a period of 5 years. That's very, very common.
I love that. I'm hoping for it. Someone in the chat last week when I was talking about buying Airbnb, they were joking around that I was buying shares in plans of a hostile takeover because I had some ideas on how to improve the company. The first one being to just, when they have the prices listed, just have the price be the post fees price. So
yes,
what you see is what you get. Cause that's like the biggest complaint that Airbnb gets is that you'll see a room for $100. And then by the time you finish paying for it with all the fees and stuff added, it's like 180. And it's like, just put 180 there. And I probably still would have picked it, but
totally. Or at least show the difference at the same time, with fees, without fees kind of thing or something like that. So they can gauge. Because then they can look, hey, are these fees high or are they good?
Well, Chris,
I do that as well.
Since we're both shareholders, let's get together on a letter. We'll write it to the board and say, hey, as shareholders, we would like to see this change enacted, and we'll see what we can do.
I'm with you on that. Totally down.
All right. I'll just sign your name on it. I won't even send it to you.
Appreciate it.
All right, Chris, anything else on your watch list today? We've got about 3 minutes left.
Yeah. Tesla, we're noticing that it's not quite having the same kind of rips that it has the prior Mondays. So if you look at many of the other Mondays, it's kind of ripped pretty heavy. That's because, for the last several weeks, Tesla has gained In 4 weeks, it's gained 50% of its value. I don't know if you could say 100,000 cars by Hertz, selling 100,000 cars to Hertz, or, kind of doing what they're doing, earnings justifies a 50% valuation. So where's all this price discovery coming from? It's coming from short-term option traders that are getting in early in the week and then getting out, and they're just kind of gamma squeezing it up. So when I look at Tesla, we've now, kind of gapped down. We're not having the normal Monday rip. And if you look on the 1 hour charts, you can kind of see, we've actually been correcting at these prices for now 1, 2, 3, 4, 5 sessions. So it seems like Tesla's taking a little bit of a breather, which is interesting because of the fact that prior to today, Tesla had roughly 6 million options out there, and today it's traded 1.1 million alone. So the fact that it's traded 1/6, about 15% of its options in one day, and there's a mix of calls and puts. When I look at all that, I feel like, okay, this is a decent sized consolidation. You're talking 1140 up 1237. It's $100. So roughly about 10% of its entire value in a consolidation. This is the biggest consolidation we've seen. This was a small consolidation. This is a small consolidation. This is big. I think traders are kind of redistributing some of their profits. If somebody's been long from 800, they're probably taking some of their things off the board, especially if they've been long options. So I think we're going to have to see a weekly breakout above this or below this to get the next direction. I will say there are a large amount of January 22 options on Tesla. So that could, and they're all at or above the current strike. So that could create a bullish tailwind to the end of the year. But then come January, you might see kind of a resettling of the price as a lot of these long-term options kind of phase out and start to get monetized. So right now, short term, I don't really want to take any of these rips right now. I'd like to, if I am going to get long, I'll look to get long in support and ideally take profit at the top and get the breakout. If it breaks down lower, then I would start looking at like 1,000 for your support level, 1,000, 1,050 for your support level.
Yeah, and Chris in the chat is saying that today's price action might look a little different than previous Mondays from Elon Musk's tweet over the weekend saying he may sell 10% of his Tesla shares. So definitely we'll have to keep our eye on Tesla throughout the week, see if that ends up.
Is Chris saying Elon's talking nonsense or I'm talking nonsense? Because Elon tweeted that over the weekend, but this has been consolidating for days. Like it hasn't. Jerry? So I'm just curious. If Chris,
I don't know. I thought he was talking about Elon.
Chris Capre is talking nonsense because okay, sure, that tweet is definitely there, but he didn't tweet this 5 days ago. This has been tweeting for this consolidating for 5 sessions. So help me out, Chris. I'm trying to understand what you're saying.
We'll get some clarity from Chris. We talked. Spencer and I talked about the tweet at the beginning of the show. Who knows if that's why Tesla stock was moving lower today? But yeah, definitely out of the ordinary if you look back on previous Mondays.
He said I'm talking nonsense. Okay.
All right. Well, Thank you, Chris. Nothing clarifies like clarity. Thank you, Chris, for clarifying that. We appreciate that.
Apologies, Chris.
I'm talking nonsense. Okay. All right.
Not Chris from the chat. Apologies to
last year. The guy who was 72% profit last year on 63% accuracy. Yeah, that guy who was a former broker on Wall Street, traded for a hedge fund. Yeah, this guy's talking nonsense. All right, fair enough. I'll take your word for it.
There you go. Chris Capre's got a great track record.
I hate to go after another Chris. Normally, I like Chris's, but hey.
He spells his name. He spells his name with a K, so you don't have to feel the same.
Chris, you got to respell your name. Then we'll have a little bit more of a communion there.
But yeah, Chris got a good track record. He knows what he's talking about. I don't know if we've got really good technical traders. We've had 2 great technical traders back to back on this hour on Mondays between Jake Wujastyk from TrendSpider and then Chris Capre from Second Skies Trading. So every technical trader is going to have a slightly different strategy. We like to bring on different ones so we can get those strategies and make a little hodgepodge for the best way to trade technically. Chris, we love having you on. We'll look forward to next Monday.
Good seeing you guys. I'll see you next week.
All right, AB, we're running behind again. What else is new? We're always running late on this show, I feel like. Why am I not even on the screen, man? What's up with our director?
Oh, there we go. What's up,
that's
What's up, Spencer?
What's up, man?
Yeah, there's
doing?
Rohan.
Oh my gosh, there's no one at my desk. Oh, there I am. I'm in 2 places at once. Crazy how that worked out. Yeah, we should rename this show Technical Mondays. I think.
But the first hour, it doesn't have to be technical. It's really just the second hour.
You're right. Anyway, hey, everyone, if you enjoyed the show, drop us a like. We'd appreciate that very much. Our next show is coming out live right now. Reminder to check out the IG Forex Live event tomorrow. Can you put the link on the screen there? Tomorrow, 11 to 3 Eastern time, if memory serves. I don't have a laptop here. And no show tomorrow. No Benzinga Live tomorrow. Why? You know why? The Benzinga FinTech Awards all day, like 9 to 5:30, I think, on this channel. We are very excited. We are making plans. People will be in New York. We will be streaming from there, from here, from your house, everywhere. It's a very exciting time. So, BenzingaFinTechAwards.com to learn more about that. And AB, we got to go because our next show is running late. Moon or bust. They're waiting for us to end.
All right, let's get to it. If you want to learn some more about crypto, stick around for Moon or bust coming up right now with our guys, Logan Ross and Ryan McNamara. Do not go anywhere. This stream will redirect you to Moon or bust automatically. You do not need to do anything. So with that, we will see y'all